Martin.
Martin.
Oh, we have to.
Lennon.
Yes.
Polika.
Here.
Piana. Mayor Coulter.
Here, thank you. We have a quorum. Next item of business would be the approval of the agenda.
I make a motion to approve the agenda as presented.
Is there support? Okay. Moved by Polika, supported by Piana. Any discussion? All in favor, say aye.
Aye.
Opposed, same sign. Thank you. Next item of business would be the presentation of the fiscal year 2014 audit report. And we're just right to you.
All right, thank you.
Thank you.
So tonight, you have a hard copy of the audit report as well as a copy of our presentation handout. I put this together. I pulled pages out of the audit report to help facilitate the presentation. So there isn't really anything new in the presentation handout, but I did pull pages out of the audit report and I added some charts and graphs. Those are new. So what I plan to do is cover the highlights in the presentation packet. Before I get to that, I would like to thank April, Karen, and Brian, as well as the rest of the city staff for their courtesy, cooperation, and assistance. I thought the field work went very well. Appreciate all the help that we got while we were here. As I said, what I plan to do tonight is to highlight the key areas of the report, and I did pull out some pages from the audit report itself, and starting with page Roman numeral 1, or the first page of the presentation. We have the independent auditor's report, and a couple of highlights here. The financial statements are management's responsibility. They're responsible for the preparation and the fair presentation of the financial statements in accordance with GAAP, or generally accepted accounting principles. Our responsibility as your auditors is to express opinions on the financial statements based on our audit. At the bottom of the first page of the presentation, our opinions are provided where it states, in our opinion, the financial statements referred to above present fairly in all material respects. That phrase, I've italicized it on the PowerPoint. Present fairly in all material respects. That's what we refer to as an unmodified opinion. We used to call it unqualified. It's now known as unmodified. That is the best opinion you can receive for a set of financial statements, and that's what you want to see. On page 2 of the presentation, I've highlighted the first paragraph, change in accounting principles. We have a note disclosure on this as well, but this year the city implemented GASB Statement 67. Financial reporting for pension plans. So this GASB statement affected primarily the note disclosures related to the pension trust funds. Next year, GASB 68 will be implemented, and that will affect the government-wide or the full accrual financial statements of the city. And I'll have a little bit more on GASB 68 in a few minutes. The government-wide financial statements are on pages 1 and 2 of the bound report, but we're on pages 3 and 4 of the presentation material. First of all, the statement of net position. A couple of highlights here. What I've done is I've circled in red a couple of the numbers here, one being the current ratio. Your total current assets divided by your total current liabilities for the governmental activities equates to 2.24. So you can cover your current obligations more than 2 times over with your current financial resources. I've also highlighted on there in yellow the net other post-employment benefits obligation under governmental activities, just over $2 million. That represents the cumulative effect of not funding the ARC, or the annual required contributions related to the retiree health care. And again, I'll have a little bit more on that in a few minutes. Another area that I like to look at is the unrestricted portion of net position. The second number from the bottom for governmental activities, $6,294,000. That represents approximately 25% of your expenses for the year. In the previous year, for June 30, 2014, you were at approximately 44%. So that did decrease a little bit. You had a lot of activity for capital assets, which increased your net investment in capital assets. So we see that jump up to almost $7 million at June 30, 2014. And also your OPEB obligation did increase, which reduced the total net position. For the business type activities, this would include your water and sewer activity as well as parking. Total current assets divided by total current liabilities, you have a current ratio of 7.16. The unrestricted net position at June 30, 2014 was approximately $11.6 million, which represents about 126% of your annual expenses. That actually is an increase. Last year you were at about 107%.
Is there a range that's appropriate?
It really depends on your systems. And we'll talk more about the business type activities in a minute when we get to the fund level financial statements. I've highlighted some things for the water and sewer fund specifically. This combines the water and sewer fund and the parking. So as a major fund, I've got a little more on the water and sewer fund. Statement of activities on the next page of the presentation handout. This is also a government-wide financial statement. It reads left to right and then top to bottom. It starts with expenses in the left-hand column. As you move to the right, you'll notice that all of your governmental activities have a net expense, and that's not unusual. You see all those numbers are negative in the right-hand column, where your business type activities, you have a positive number, and you want your business type activities to be able to cover your expenses through user charges, and they are. The results for the year on the full accrual basis of accounting, the third number from the bottom, the change in net position for governmental activities, $1,379,000. For the business type activities, an increase of $977,000. On page 5 of the presentation, we start the governmental funds financial statements. These are pages 3 and 5 in your bound report. The governmental funds are prepared on the modified accrual basis of accounting, which means they have a current financial resources focus. This should be a more familiar presentation for you. This is the level at which budgets are prepared and your interim reporting is received throughout the year at the fund level. I tend to focus on the general fund as the operating fund for the city. So in the left-hand column, I've highlighted a few numbers at the bottom of page 5 of the presentation. This is the balance sheet. So it's a snapshot as of June 30th, 2014. Your total fund balance is $5,591,968. Now, portions of that total have been earmarked for specific purposes, and so what you have is unassigned fund balance is $4,561,518. That unassigned portion plus the assigned portion of fund balance would make up the unrestricted fund balance, because you can assign an unassigned fund balance as you see fit. So what's unrestricted represents approximately 25% of your expenditures and other financing uses. So I know in the MD&A there is a reference to a comparison of your unassigned fund balance to expenditures. This comparison is 25% compares the unrestricted, so unassigned plus assigned, compared with the expenditures and other financing sources. So we're at about 25%. In the MD&A, it's about 26%. It's really a pretty similar comparison or calculation. The Government Finance Officers Association recommends minimum of 2 months' worth of normal operations, which 2 divided by 12 is about 17%, and you're at about 25. On page 6 of the presentation, we have the statement of revenues, expenditures, and changes in fund balances. Again, focusing on the general fund in the left-hand column. Total revenues for the year, $18,196,833. That actually is a little lower than the June 30, 13 revenues, but it's less than 1%. It's about a 0.5% lower than last year. Expenditures, just below the middle of the page, $17,497,499. That actually is an increase over the 2013 expenditures. It's about 1.5% higher than last year. So, and that's reflected in the graph that you see on the screen there. Really, the most significant changes from last year to this year, or from 13 to 14, occurred in the transfers in and out. You have a transfer in, or transfers into the general fund of $976,000, primarily as a result of closing the internal service funds. So you distributed that equity in the internal service funds, and you see transfers into the general fund of $977,000. And then you had significant transfers out to the Major Streets Fund. Total transfers out were $2.6 million. And so that was really the biggest change. Last year you had total transfers out of $1.2 million. So those are the highlights. The results for the year, the third number from the bottom, the net change in fund balance for the general fund, a use of fund balance of $950,000. So, because I know everyone likes to look at financial statements, I brought the graphs with me as well. This is a 5-year bar graph of the general fund revenues, expenditures, and total fund balance. As you can see, you used fund balance in 2010 and 14, as we just discussed, and you added to your fund balance in 11, 12, and 13, so where the revenues exceed the expenditures. sound financial condition over the course of the 5-year period. A couple of pie charts here that detail the composition of your general fund revenues and expenditures. The first one is on the general fund revenues for 2014. Largest source of funds was property taxes at 50%. It was at 52% for 13. Followed by intergovernmental revenue, which is primarily state shared revenue, sales tax money at 17%. That was 19% for 13. And then fines and forfeitures are at 14%, and those were at 15% for 2013. So relatively consistent from year to year. The expenditures, the next pie chart, largest use of funds, public safety at 57%. They were at 62% last year. General government at 22%. Those were at 25% in the previous year. The big change here is the transfers out percentage. It's at 13% for 2014. They were at 7% for 2013. So,
I'm sorry, could you repeat what was public safety again last year?
public safety last year was at 62%. But because of that increased activity and the transfers out, the pieces have to add up to 100%. So you do see that shifting in percentages come through there on that pie chart. On page 9 of the presentation, I have a couple of line graphs here. The first one is the unrestricted fund balance compared to expenditures and other financing uses over the course of the last 5 years. This graph is in terms of percentages. We started out in 2010 at 23%. We increased up to 2012. 12 and 13 were at 30%, and then back down to 25% at June 30, 2014. Again, all well above the minimum recommended fund balance from the GFOA. And this line graph demonstrates that. This is in terms of dollars. So that blue line is where the city, that's the city's trend, and the, I don't know, maroon or not maroon, but kind of a brownish color line is the minimum recommended fund balance. So that's that 17% of your expenditures and other financing uses for the last 5 years. So as I said, excellent financial condition for the general fund. The proprietary funds are on pages 7 through 10 of the bound report. We're on page 10 of the presentation handout, starting with the statement of net position. Again, a snapshot as of June 30, 2014. This is a full accrual financial statement, just like the government-wide financial statements were. The total column that you see on the statement of net position page is the same information that you saw on the statement of net position for the government-wide financial statements under business type activities. So this presentation breaks it down into the two funds, the water and sewer fund and the auto parking fund. I've highlighted a few things in the water and sewer fund because it is a major fund for the city. Again, I looked at the current ratio, total current assets of $10.5 million divided by total current liabilities of about 1.7. You have a current ratio of 6.33 at June 30, 2014. The unrestricted net position, second number from the bottom, $9,920,784. For this calculation, in the statement of net position for the government-wide statements, I compared it to total expenses. For this calculation that you see at the bottom of page 10 of the presentation, I've factored out depreciation from operating expenses. And so if you compare the unrestricted net position to operating expenses less depreciation as a non-cash expense, it gives you 165%. Again, an increase over the previous year. You were at 140% at June 30, 13. So you asked about a recommended rule of thumb or target amount, and really it depends on the age of your system. You know, your condition of the system. If it needs a lot of repairs, you're obviously going to want a higher unrestricted net position number. So it's hard to give you, a percentage because everybody's different. Yeah. It really is an individual ratio or calculation, and I think it's more useful to look at the trends. So let's.
But and maybe this question is for Karen or you, April. But the $9,920,000, that's the fund that we're talking about, is that we're talking about for other purposes?
Yes.
So it's Actually closer to 10 million than 9, right? That's the number? Yep, all right, just double check.
As of June 30th.
Yeah, as of June.
As of June 30th. Okay. Sorry, go ahead.
No, okay. Page 11 of the presentation, we have the statement of revenues, expenses, and changes in net position. This is page 8 of the bound report. Just in comparison to the previous year, operating revenues, $8,705,000 at June 30, 2014. That's a decrease of about 15% from the 2013 revenues. So you can see the blue bar on the graph there did drop, 15%. Operating expenses, $8,169,000. That was an increase of about 3% over the previous year's number. So kind of hard to tell from the graph, but it did increase a little bit from 13 to 14.
And what do we make of the decrease in revenues? Karen, what do we make of the decrease in revenues? Actually, 2 straight years of decreasing revenues in the water and sewer fund.
What was your question, though? Specifically, you said there was a decrease.
Yeah, the decrease in revenues. What's the cause of that?
Well, actually, one particular account was decreasing in fiscal year 14 because we changed the way that the city assessed penalties. So there used to be a double penalty. We have
Yep, that's right.
$50. So that actually was a significant decrease.
Yep.
That was noticed, and that's really what probably the cause of it was. The decrease in rates that we projected or that we approved was starting fiscal year 15.
Right, that's why I was not expecting to, yeah. And volume was down?
Yes.
Okay.
But your net position continues to increase. In each of those years, your net position increased. So even though revenues are down, your net position is increasing over the last 5 years.
Okay, thank you.
So let's go back a minute here. So this graph shows a total net position, but a portion of that total, of that yellow bar, is invested in capital, and you can't spend your capital. So we're looking at the unrestricted portion of net position on the next bar graph. So again, the brownish color at the top is the unrestricted portion of your net position, where the blue part is the invested in capital, net invested in capital number. And as I said, not only is your total net position increasing, but so is the unrestricted portion of the net position. And that increase in the unrestricted portion of the net position is reflected in this graph here. In terms of percentages, again, you started at about 80% in 2010, and you're up to 165% in 2014. So sound financial condition, improving financial condition for the water and sewer fund. Okay. We also issued a report on internal control over financial reporting. This is on pages 68 and 69 of the bound document, pages 14 and 15 of the handout. A couple of highlights here. We did not identify any material weaknesses in internal control. Didn't have any issues there. No significant deficiencies. We're not allowed to say that in the report, but if we had significant deficiencies, we'd have to tell you about those. So you can deduct from that what you will. We didn't have any issues in internal control whatsoever. On page 15 of the presentation, we do highlight the unfavorable budget variances. And actually, if you turn to page 16, this was pulled out of the notes to the required supplementary information. There were 2 variances that were noted related to the budget. The biggest one is the transfers out for the general fund. And again, that primarily was the transfers to the major street fund. Fairly common finding, actually, to have budget variances. It's probably our most common finding that we have. And then upcoming accounting pronouncements, page 46 of the bound report and page 17 of the presentation material. Note S, upcoming accounting pronouncements. Under the current guidance, a liability would only be recorded in the full accrual financial statements or the government-wide financial statements to the extent that the annual required contribution is not made relative to the pension system. The state requires that local units fund their pension system, so we generally don't see liabilities under the current guidance. But the ARC, the annual required contribution, is not really the liability. The ARC is a mechanism for funding the liability. Under GASB 68, the true pension liability or asset will be required to be reported on the statement of net position and the full accrual financial statements. Under GASB 67, which was effective for this year, as I talked about earlier, that affected the pension plan financial statements themselves. Under 68, those affect the city's financial statements, and that asset or liability will get recorded next year on the face of the full accrual statements. To give you an idea of what that's going to look like, page 35 of the bound report, and this is page 18 of the presentation, under the Ferndale Employees Retirement System, we had to disclose under GASB 67 what the city's net pension asset would be for that system, and that's at $11,769,000 as of June 30, 14. So that's a net pension asset that'll get recorded on your full accrual statements. On the next page, for the police and fire retirement system, you've got a net pension asset of just over $3 million. So that's going to improve the net position of the city in the June 30, 2015 financial statements. Now the other shoe that falls. On page 43 of the notes, or of the financial statements and the notes to the financial statements, we have other post-employment benefits that we talk about. And this is page 20 of the presentation handout. There is an exposure draft that is currently being deliberated by the GASB, the Governmental Accounting Standards Board, that will look very similar to what these GASB 67 and 68 statements are doing to the pension systems. You'll have to do for the OPEB as well, the retiree health care. So the OPEB liabilities will also be required to be reported in the statement of net position. As I said, it's an exposure draft form right now. Currently, only the unfunded ARC is being recorded as a liability on your statement of net position. And that was the number that I had highlighted at the beginning, $2,034,226. But the unfunded actuarially accrued liability is $38,720,000. And so that liability, or close to that number, will have to be recorded, likely effective for fiscal years ending 12/31/17 and later. So we're talking about June 30, 2018 for the city of Ferndale. So the one handle will add to your net position, the other one's going to take it away.
Yep.
Sorry, I am a little confused on this. Do we have to come up with $38 million between now and 2017?
No, it's just like a pension fund. You have to just keep
Putting money in it.
Putting money toward it.
However, you don't have the requirement right now of fully 100% funding it like you do pension. So pension, we
Gotcha.
have to meet those requirements. Right now, we don't have to do that with OPEB.
Okay. But we have been to make sure that we're secure.
We've been trying.
Make
Yeah.
it better than other
But
communities.
these next couple budget years, we're probably going
Is
to
where we've-
we're toning it down a little bit.
Pull back on those.
Okay.
Yeah. Anyone have any other questions?
No, this was great.
Yeah.
Thank you.
Thank you.
Thank you.
So I do want to point out something. I guess it doesn't really matter which page. Page 7 of the presentation, where we're dealing with the general fund revenues, expenditures, and fund balance. This actually aligns quite well with what the financial review committee determined should happen when we supported the Headley override, was to front load the fund balance so that this year and next year we can start dipping into that to make up the difference that we're going to lose in revenue, because housing costs, although are going up, the tax rates aren't. So.
All right. Thank you, sir.
Thank you very much.
Appreciate it.
Thanks, Karen.
Let's see. Anyone from the audience like to address council on this item? All right. Meeting adjourned.